When you invest, how do you make sense of all the possibilities available to you? How do you select your investments and customize a portfolio based on your own needs, your own tolerance for risk, your own expectation for returns? Investors are discovering they need their own systematic, intelligent approach to investing globally, as well as for their future. The AECOS program is a fast, simple way for investors to customize a portfolio to meet their own performance expectations. Investors start by selecting a diversified portfolio of global investments, then adjust a percentage of each asset class, designing the portfolio to meet the return objectives and tolerance for risk. Investors design the portfolio framework that fits their needs, while the AECOS management team makes the ongoing trading decisions. Let's start with some rules that drive the AECOS investment philosophy. Number 1. Suffering large losses can permanently damage your portfolio and your financial future. Stock losses like those investors suffered since 2000 can destroy your ability to ever recover again, and recovering can take more time than you can imagine. Investors in Japan are still suffering a 75% loss from market highs achieved more than 20 years ago. Stocks are not the only game in town. Stocks are investments with one of the highest levels of volatility and risk. Stocks can provide good, long-term profit potential, but they also display the highest risk. It's not enough to invest in the right stocks, as many experts will tell you. Why? When stock markets fall and the tide goes out, a dropping market drives down all but a few stocks, even many good ones. Losses are a byproduct of the search for profits, but AECOS can control these natural losses through a disciplined approach of long-term portfolio layering, combining traditional portfolios like global stocks and bonds with a diversified portfolio of alternative investments like currencies, metals, and energies. Introducing alternative investments to your portfolio can help reduce total risk through added diversification and give you profit opportunities in new areas you have probably not invested in before. The goal in creating a good, long-term portfolio is finding non-correlated assets to help reduce risk and smooth your performance. What is non-correlation? It is a way of combining assets that are not all making or losing money at the same time. As you diversify your assets, the chances of losing money in all sectors at the same time decreases. Number 3. In most situations, higher returns means higher risk, especially if you choose a single investment like stocks. To manage investment risk, AECOS looks to intelligent diversification. The AECOS program focuses first on increasing your investment options so that you don't depend on one asset class alone. Combining traditional assets like stocks and bonds with alternative assets like currencies, metals, and energies can help you reduce risk, increase profits, and give you a greater selection to improve portfolio performance. Once the ecosystem is comfortable that the portfolio is diversified enough, it measures the right mix of each investment to improve returns and reduce risk. Number 4. Lowering risk does not mean investors must sacrifice good returns, but focusing on reducing risk first can help lay the groundwork to use time leverage to dramatically increase the potential of portfolio returns. In the end, the goal is higher returns and lower risk, not an easy task in today's volatile market environment. The ecosystem does the following. Number 1. Diversifies globally, diversifies among asset classes, both traditional and alternative assets. We trade 3 major sectors, stocks, bonds, and currencies, in 3 of the largest global regions, US, Europe, and Japan. When warranted, AECOS may also invest in inflation hedges, like precious metals and energy contracts. Number 2. Combines non-correlated portfolios to diversify, reduce risk, and increase long-term returns. 3. Invests both long and short. The AECOS program can buy low and sell high, or we can sell high and buy back low. 4. Invests based on both fundamental and technical factors. Our fundamental and technical logic filters the contracts we trade and our overall market exposure to these investments. Aegis asks the following fundamental questions. How are moves in interest rates affecting future potential of stocks? Is inflation popping up on the radar screen? Is this a cause for worry? How is the dollar performing? How is gold performing? Is the overall stock market in an uptrend or downtrend? Which stocks, bonds, and currencies are the strongest within our universe? Should we exit from our current position? Number 5. Adjusts investors' risk and reward demands dynamically. No two investors are exactly the same. Each has different needs, goals, tolerance for risk. One wants safety and security of capital, the other wants risk, excitement, the thrill of the hunt. Every investor is different. Different goals, different expectations for return, different tolerance for risk. The key is to be you. The AECOS program designs an investment strategy for your unique profile. AECOS, smart investing for intelligent investors.